For the CME Group, I'm Eric Wolfman Wilkinson. Let's get in the zone. The Cash Money Zone is Tuesday, October 2nd. We've got a lot to go over here. One of the main things is that position limits. We've all heard about this being talked about since 2007, again in 2010, when commodity prices started really rallying. Oil was above 100. Corn was up in the $8. They're worried about speculators, these big banks putting on huge positions without a hedge on them. So what did the CFTC, one of the things of Dodd-Frank is to put position limits on these guys. But Judge Robert Wilkins came out and said that the CFTC did not come up with enough information to prove that it was necessary to put these position limits onto people. So in effect, it's gotten kicked back. What does that mean? It means that it's probably going to fail unless the CFTC within 60 days comes up and tries to get this reinstated or to put a halt on this judge's ruling. So in the meantime, it looks like that it's not going to go through, or it could be several years before anything happens. So on to the markets, into gold. Gold has seen this big rally, came up, tried to test this 1800 area, came up a little bit short. I think that we really need to see the bulls take the rally higher into the 1800s aggressively. Otherwise, I think it's going to start failing due to the long starting to cover. That market could start to sell off and trail back down towards the 1700 handle at about 1724. If we can get above that 1800, specifically above like 1810, then the market will be rejuvenated. We could really see a rally up to test 1837, which is my next resistance level there. All right, on to corn. Corn keeps trying to rally up into this 755 area, and we failed a couple of times. There was a huge amount of volume today around the 750 area. That's where I'm seeing a lot of the funds start to need to sell to cover their hedges. And then on the other hand, we have a lot of the manufacturers, people that are needing this corn, coming in and buying this market, supporting it at these levels. So it's going to be whether or not these hedges kind of come off, these historic longs get their hedges on. But right now it's looking pretty weak with the corn aspect. Now on to the dollar. The dollar is really getting beat up against everybody else. That was a bit surprising today with all that's going on, good economic data coming out. In the meantime, we had the bonds trading down around that 149.11, 149.08 area I've been talking so much about. I even talked about it yesterday. We came down there, tested it a few times, really found support, and then the rally ensued. Why? Because the government's in there buying. Yes, the government's in there trying to do that Operation Twist, flatten out the curve for us. Well, that's really gotten the market to rally. In the meantime, that has hurt the Dow. The Dow has come off of these levels, and we're trading down below 1444 last I checked. Yeah, we're still down there, 1438. You know, if the bears keep pushing this and the bonds keep rallying, we could see this 1400 level tested before, well before we see the 1500 handle. And onto the gold market. We talked about that. The gold markets could see a little, or the gold and commodities could see a bit of lift later on in the day as this dollar starts getting pummeled. So that's one thing to really keep an eye on, is this dollar trade or the euro. All right. So if you can't take that, take it easy.